What the heck's happened to the stocks of the cruise lines? These stocks have been big winners for years thanks to the bull market and travel. Lately, they've been hammered by President Trump's tariff talk. Is that right? Take Royal Caribbean, which reported a strong quarter in late January with solid full-year forecast. Enough to send the stock up 12% in response. Since then, though, that gain's been erased, and then some, including a nasty 6% loss today, as the tariffs on Canada, Mexico, and China went into effect, fueling concerns about a broader economic slowdown. So could this be a buying opportunity, or do we need to worry about a trade war-induced downturn in the industry? Let's check in with Jason Liberty, the president and CEO of Royal Caribbean. What a winner! We get a better read on the situation. Mr. Liberty, welcome to Mad Money.
Thanks for having me, Jim.
Okay, so I think we got to clear up some things immediately, Jason.
Sure.
If there is a trade war, which we have, problems with Mexico, probably Canada, what the heck does that have to do with Royal Caribbean?
Yeah, well, I think there's a few components of it. On the hard costs, there's really not. I mean, we buy most of our stuff from the U.S. and that tariff challenge for us is not there. Of course, what we do look at is the consumer, right, and how these things could possibly impact the consumer. One of the things that's a great hedge for the consumer for the cruise industry, especially for Royal Caribbean, is we still trade at a 20-25% discount to land-based vacation. So they're still getting a lot of value out of that vacation experience. And our recent surveys of our guests show that actually their propensity to cruise is at all-time highs, and their desire to go on vacation is 50% higher than it has been in the past.
Well, that means to me that you've got visibility, which is what I really want. A lot of companies don't have that. You also announced the Perfecta program. This is a 3-year program, which would make people feel that they should otherwise. The compound annual growth rate here is extraordinary.
Yes, yeah. So we're big fans of profitability programs. Right. We tend to achieve them and achieve them early. And so we came out with Perfecta today, which is essentially that we're going to grow our earnings on average 20% a year on a CAGR standpoint, and we're going to deliver high teen ROIC. And so we do have great visibility into the consumer. We're seeing them book each and every day. That window continues to extend. We're able to raise our pricing, and we're able to see how they're shopping or spending on our ships. And that cash register continues to ring and be consistent.
I think there'll be people who say, well, wait a second, what are the components of visibility? One of them is there are not a lot of new ships coming on.
Yeah, so on the supply side, it actually is. It's pretty well controlled. There's about 4 shipyards around the world. They're all in Europe. They build cruise ships. And those cruise ships, there's 1 or 2 each yard produces each year. So it's actually pretty well constrained in terms of the supply growth. So the industry, when you consider, ships that are going to be retired, at best is going to grow 3 to 3.5% over the next 5 to 10 years. And that's why, on the supply standpoint, I think it's very well managed.
Now, one of the things that I just came back from Florida, anyone who knows Florida knows that you are a giant part of the economy there. That means you pay a lot of taxes. It was a little surprising to hear Secretary Lutnick just say out of nowhere, I felt, that you guys got to pay taxes. This is something that comes up periodically. You pay a lot of taxes here. It's just you're not domiciled here. So how would you pay taxes if you're not domiciled here?
Yeah, well, there's a lot of taxes. We pay port taxes and head taxes and really the different jurisdictions that we go into. And, of course, there's a lot of stuff that we're buying for our ships that we're also paying tax. We think it's an opportunity just to educate. And typically when we educate exactly all that we do, it typically resonates very well with different constituents.
Right. Now, on the earnings call, you noted that bookings have been accelerating in the new year, resulting in the best 5 booking weeks in company history. I would love to hear that with consumer sentiment falling, that can continue?
Yeah, so we do expect that to continue to happen. Of course, our wave season for the cruise industry is typically the first couple months out of the year.
Right.
We've already had, don't forget, in 2023, our yields improved by 13.5%. Last year, they improved again by double digits. And so to say that, to make that statement with that kind of comparable, really talks about the strength in demand for our different brands. And we expect that pace to kind of continue, not just for the ticket, but also for onboard spend.
Well, let's talk about the brands. I understand that when a customer comes from another cruise line, and I like all the cruise lines, and I've been on record for 20 years liking them. But when they come to you, they tend to stay with you. And I think this new River initiative, even though it's small in terms of the actual size of all your ships, is part of keeping people in your ecosystem.
That's exactly right. So we've spent decades really focused on making sure we had the right brands and the right segments. We own the family segment with our Royal brand. We own the premium segment with Celebrity, and we own the ultra luxury and Expedition with Silversea. So being the leaders in those areas, we've now built that family of brands that we should be able to keep our guests inside of our ecosystem. We also listen to our guests in terms of what other vacation experiences are they looking for. And one of those experiences that is not a substitute, but it's actually an additional vacation, is river. And so for us, we've decided to enter that, and I say this a lot, we're not going into it as a hobby. We're going full in, and we think it's going to be an incredible vacation experience to add to our ecosystem.
Okay, I think I do want to go back to that point, though. I mean, if you have 10 river ships, is that even equal to one of the giant ships I'm seeing behind? No,
you would need over 40 of those river ships to even get close to one of the larger ships that are there. So for us, one of the things when you enter new businesses like that, most people sweat over the commercial side of generating enough demand. Now we have reciprocity across our brands. We're getting a lot more cross-selling reps. So our ability to generate demand for those ships for places that we know that our guests want to go is really something that is the benefit of this accelerating flywheel.
We're all over tariffs today. You've got a perfect day in Mexico in 2027. You've got a Royal Beach Club Cozumel slated to open in 2026. I'm looking for any nexus to Mexico. It doesn't seem like anything can really be a problem for you with tariffs. No. I think the tariffs, I don't think that we believe will impact us in that way. I think we're focused on how do we build more and more vacation experiences. We have this incredible island called Perfect Day in the Bahamas. It's absolutely amazing, a thrill and chill. And we've got another one on its way in Mexico. We've got 2 beach clubs that we're building. We know that we can really enhance the vacation experience through these private destinations. And of course, we have 9 million guests a year, and so we have the ability to ensure that when they're in the Caribbean, which is about half the time, that they're going to have a perfect day. All right, and one last thing, I do want people to understand the bargain. I mean, people will be saying, well, wait a second, they can't possibly have that level of visibility. I come back and say, everybody else has really jacked up their prices. I mean, it's incredible how expensive a hotel room would be if you decide to do off the coast in Italy. Can you give a comparison? I know you said you have some level, but a comparison between staying in a suite for 1 week in a beautiful Silversea, I don't know, beautiful,
sure.
Versus what it would take. Ritz-Carlton. I know they have cruises now, but the Ritz-Carlton are 4 Seasons. What's the compare? Yeah, I mean, I think looking at it on a comparable basis, like if you take, for example, like the Silversea inside a suite, it might cost you about $1,000 a day per person to be on that. By the way, that includes your food, your land-based experiences, your beverages, et cetera. You compare that to, for example, like a Ritz-Carlton or a 4 Seasons on land, especially on the leisure side. That number is 2 or 3 times that. Right, an Ocean Club in surge price. Exactly right, and so there's a lot of value that gets gained out of that, and these comparables of this 20-25% is us looking at a 3, 4, 5 night out of Orlando versus going to one of the parks and that's there, and looking at that comparable, and the reality of it is though it frustrates me every single day, there's that opportunity to close that vacation gap. Well, look, I think it's fantastic that people are getting opportunity off of something that really won't matter. If there is a slowdown, a turn down, people go cruising rather than go to those various hotels that you just mentioned that are not an option because they're too high. That's right. All right. That's Jason Liberty, Royal Caribbean Group President and CEO, and that's RCL. Very rarely in the last 3 years has this stock been as low from its 52-week high as it is right now. Mad Money's back at the break.
Coming up, how is one company working to bridge the gap between our growing energy needs and where the energy markets are at today? Cramer's sitting down with Enbridge, fresh off its Investor Day. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.